The U.S. dollar is higher after the U.S. Involvement or getting involved in the Iranian-Israeli conflict. That had the biggest gainers are against the yen, against the Aussie, against New Zealand, which are each down by over 1% versus the greenback. The U.S. dollar is higher by 0.5% approximately versus the euro and the pound sterling. In this video, I'll take a look at the changes of the dollar versus yen, the euro versus U.S. dollar, and the sterling versus U.S. dollar from a tactical perspective. Talk about the risks, talk about the biases, talk about the targets in each of those currency pairs after the weekend move. So let's get started. Let's start by taking a look at the hourly chart of the euro versus U.S. dollar. And as you can see, the market first gap to the downside below these two moving averages. The green line represents the 200-hour moving average. The blue line represents the 100-hour moving average. And after moving down lower, sort of to a place that was not necessarily anything important, we did see a bounce back to the upside where the price tried to stay below the 100-hour moving average, the closest, but then ultimately broke through after a break above both the 100 and 200. We fell short of this target area up through here, the swing area, and then market quickly rotated back to the downside, and we've seen increased selling into the start of the U.S. session. We are seeing a little bit of a rebound over the last hour or so of trading after the market came down toward a support level that was defined right here at the 114.45 level, or sniffed it, I guess. Wasn't necessarily that close. This level corresponds with swing highs from here and here before breaking to the upside right here, and we moved down to that level that was a low from last week, as a matter of fact. So early buyers against that level right through here have pushed the price back in between the 100-hour moving average on the top side, this swing area on the downside, and we'll see how well that plays out from this point right forward. Traders may look at the low from earlier in the Asian session as a level of resistance right around this level right through here, and we are trying to trade above that level. Getting above it might give the buyers even more confidence to take a run toward the 100-hour moving average. We will see, but the main levels are the 100-hour moving average up here and this swing area down through here. Let's take a look at the dollar versus yen next. I'll look at the 4-hour chart because this had a pretty decent move to the upside. The yen is now up 1.05% after coming off of its high price, which happened in the current 4-hour bar. On the top side, you can see that there is resistance against this high going back to, I guess that's May 12th or thereabouts, where the price peaked at 148.647. That level happened to also correspond with some other levels going back in time, including this this low right here, this low right here, and maybe even going back to this low right through here as well. It got a little messy through these weeks right through here, but once we broke through those levels right through here, the market tried to come up toward that level and couldn't do it. Rotated back to the downside. Did it right here, which increases that level's importance, and that's the key target on the top side near the 148.56, 60, 62-ish type area on the top side. On the downside, we'll look at this swing area through here as a level of support between around 147.30 level. We'll see if that level can hold support. The other level that's probably important for the dollar versus yen is this blue line. This blue line represents the 100-day moving average. It kind of comes in at 146.85. So if I were to go back to our 4-hour chart and put a horizontal line at 146.85, that level should be of significance to you as a trader, right about that level right there, give or take a pip or two. Be aware of that level on the downside on further selling pressure. But on the top side, we have 148.64. On the downside, 146.85. And in between, we have this swing area around the 147.30 level. Finally, let's take a look at the sterling versus U.S. dollar and looking at the hourly chart for this pair. The initial move was to the downside in trading here today. We did get a rebound back up toward a couple key levels, including the 38.2% retracement of this move to the upside. That level comes in at 134.55, and also the 100-hour moving average. That's the blue line in this chart, staying below both of those levels, or one of them. We did move just a little bit above the 38.2% retracement. Gave the sellers a go-ahead to push to the downside. Indeed, they did. We moved back down toward a swing area. Let's see if we can zoom out here and see importance. You can see, go back in time, this level was swing lows through here, and then swing low right here, corrective low, swing high right here, waffling and moving back to the upside. It's an okay level area, 133.61 up to 133.78. But if we were to move below those levels, move below this old high right through here after, then that would increase the bearish bias, and half traders looking toward the 61.8% retracement at 133.28. So sellers are more in control. We're also toying with the 50% midpoint of the move up from the May low to the May high. That level also is going to be a level of importance for traders. So keep that level in mind, as well as 133.869. So there you have it. Look at three of the major currency pairs. Kickstart your day after the aggressions over the weekend and the increase in the conflict in the Israeli-Iran war. So good fortune with your trading. My name is Greg Mikulowski. Bye-bye now.